Well, Swiss bank UBS set to buy Credit Suisse as central banks look to ease banking panic. But our next guest says this move will likely magnify Credit Suisse's problems. Here to discuss this and more is Michael O'Rourke, JonesTrading Chief Market Strategist. Good to see you, Michael. So you actually, in your note, talk about this acquisition of Credit Suisse, taking this from a $500 billion problem to a $1.8 trillion problem. How so?
Yeah, I'm not a believer that when you have, a problem, the solution is to make it a bigger problem. And I think that's the risk that the regulators have undertaken here. When you have these banking crises, these banking panics, I think it's better to, handle them one at a time and target your response. So when you think about when Bear Stearns fell back in 2008, JP Morgan acquired them. And, it created volatility and it undermined confidence in JP Morgan for a time being. In the end, JP Morgan did fine. But while you have this ongoing volatility, you just don't want to create the potential for greater fear in a larger institution.
So then, Michael, what should banks be prioritizing right now?
Well, obviously, the big concern is, as Professor White just says, deposits. Every bank is looking to maintain their deposit levels, and that is the issue that we're having here, especially in the United States right now. Basically, with the pandemic response between monetary and fiscal policy, we saw a 35% increase in deposits in 2020 and 2021, and the banks had to basically put that money to work to earn a return. And what happened is, relative to the overall deposit base in the country, the insured base dropped to relatively low levels historically. And now that you're seeing some banks overreached while investing that capital or investing those deposits, they've raised significant concerns here that depositors want to make sure they don't lose their money. And we've seen deposit flight, and that's been the source of concern here in the United States for the past 10 days or so.
So then, as people are looking for some solutions here, expanding and modernizing FDIC insurance has come up, but what should be the parameters around it, being that we do now have digital banking and we do have this megaphone in social media that can spread information and misinformation instantaneously?
And that's key, right? Because the information is traveling so quickly here that the regulatory structure is not prepared for it, basically is the way to describe it. And this is all a new phenomenon over the past decade. So obviously, I would say the $250,000 insurance threshold is too low. It was set back in 2008. And I think there's a number of different ways you can go about it. I would think it would need to be at least double. I'd say you compare it to the level of the economy. The economy is about 85% larger today. Or you can compare it to the level of insured deposits, which is probably about 110% larger today than it was in 2008. And just on those metrics alone, you get to a number north of 500,000. But there's a number of different ways the regulators can choose to do it. But the one thing that becomes abundantly clear is that the $250,000 threshold is way too low. And then you've had Elizabeth Warren this weekend say it should be $1 million or $2 million. So I don't even think you need to go that far. But if you updated it to somewhere north of $500,000, I think you'd stabilize a good portion of the banking system in this country.
But Michael, you have to wonder then, does it take some of the risk out of it if you know that the FDIC can just step in? We saw that Kevin O'Leary was on CNN saying he would never put money into a bank stock again because President Biden had essentially nationalized American banking, making it less profitable for shareholders long term. What's your take on that?
No, I don't believe that's necessarily the case. Obviously, we've had the deposit insurance since the 30s. So this is something that's been, we've had for a long time, and it's been an important stabilizing factor in the banking industry. I think every so often we have to modernize and update banking regulations, but generally it's a good business. Again, no depositor is going to put their money in the bank for what has been, especially for the past decade, a pretty minimal return if their money's at risk of loss, just because bankers make poor decisions. So basically, you definitely need that level of protection there. And I think it's something that once it happens, the banking industry will stabilize, and it is a very profitable business. I think that's abundantly clear, and we've seen that we've come through the financial crisis in 2008 and 2009, and many institutions are so much stronger. But again, you're always going to have someone who goes a little too far, someone who reaches a little too far for yield, takes too much risk, and once in a while, those players have to be, there has to be some volatility so that they get shaken out. But overall, the systems are one that's worked very well for our country.
And Michael, obviously, the Fed keeping an eye on that while preparing for the FOMC meeting this week. In terms of what's going to have the most impact on the economy slowing down, rate hikes or what we're seeing in terms of a tighter credit and loan environment that might follow now from this bank run?
Yeah, I think, I've been a person who thinks the Fed should have hiked rates earlier and have been an advocate of them hiking rates. I think that would be a big mistake to do that this week. Because as I said, the bank's primary concern right now is sustaining their deposit base. They're not worried about originating loans and extending credit at the moment. So we should expect to see a slowdown in credit growth in this country, which again, that will slow inflation, that will slow the economy. So I think the Fed has to be a little forward-looking going into this meeting and say, right now is the time to pause. If the banking industry snaps right back in the next several weeks or month, they can always raise rates at the next meeting. But right now is the time to see how the dust settles here and make sure that the banking system's stable.
We'll have to see. They do tend to look at that lagging data, so hard to gauge whether or not they'll take that forward approach here. Michael O'Rourke, thank you so much. JonesTrading Chief Market Strategist, thank you for joining me this morning.